Hi. Absolutely eye-opening, all three. So far today, my mind is boggled. Perhaps it will settle down. But singularly for the farming one, that really, really interests me for many reasons that I won't go into right now. But do you work with farmers who don't already have I can't remember, the ability to produce energy? Do you help them fund that as well as the buildings, or do you only go with people who are already doing it?
So obviously, in order to be on subnet 110 and to be providing green compute, obviously that energy has to be through green means. However, we are working with lots of networks of farmers who are curious about investing in this proposition but might not have renewable energy assets themselves. So inevitably in the farming world, as we've now been working for many years, everyone knows each other very well, and it may well be that someone in the local community has renewable power, and there's no reason why I wouldn't be able to centralize a location that everyone can take advantage of, and then obviously we could split revenues effectively in that manner.
Brilliant. Thank you.
Thank you. Can you hear me? Yeah, okay. I have a couple of questions for different subnets. My first question is for green compute. I have heard that big AI data centers, from a power perspective, have very unstable draws. The GPU chips suck and push and suck, and it's wild. So it's not just the total amount of power they need, it's highly variable. You rely on renewable energy sources, the famous intermittence, like solar and wind, which is also highly variable. So how do you insulate, and you have, I presume, reliability guarantees to the people using your nodes. So how do you create stability? How do you get in the middle of that, where you have volatile draw, volatile inputs, and high reliability? How do you do it?
Good, great question. Always good to speak with an educated and informed question. So the primary source for our renewable energy at the moment is actually anaerobic digestion. So anaerobic digestion is not intermittent. It produces power 24 hours a day. So that's actually our primary mechanism of deflecting that. So often what we find is there's about 750 anaerobic digestion sites across the UK. I'll be one of the keynote speakers in Birmingham at their annual conference next week, again, talking about this very same thing. So because those engines produce power 24/7, you don't have the same issue you would with solar or wind. What we've now seen on the platforms, we work on a lot of hydro sites, a lot of wind or solar sites. UPS batteries are now becoming dramatically cheaper. So if we flash back only 5 or 6 years ago, a megawatt worth of batteries was roughly about $1 million, £1 million. Today, you can get a megawatt of batteries for £200,000. So what we're now seeing is actually the commercials historically didn't line up. So if you bought a battery 5 years ago, by the amount of district charges up and down, it didn't really make sense, because what you do is you store the power when it was cheap at night, sell it back to the grid, make 2 or 3p, and it didn't make sense. Now, if you were to stick on a data center, for example, if you're selling power back to the UK grid at the moment across the UK, you're typically getting 8 to 12 pence per kilowatt. Over the past year that we've been running on some of our sites with the new AI equipment we've deployed, that's actually between 80 and £1 a kilowatt. You're talking about 1,000% uplift in profits, which all of a sudden then make the commercials for UPS a complete irrelevance. And actually, through the commercialization of the asset, we've now opened up this new range of commercial viability that didn't exist before. So both of those assets and both of those reasons as to why we'd be able to handle that variance.
Okay, thanks very much. And a question for Synth. You mentioned that you're either starting or have already started your alpha token buybacks. You've cut off your API because you're doing well in trading. My question is, why would you ever buy back when you can take that money and trade?
So there's a few reasons. Firstly, we want to ensure that the miners on the subnet are continuing to get paid well for their work. And this is something we've championed for the last 12 months, that subnets that burn all their emissions to miners, it doesn't make sense, right? You have to pay people to get good work, good intelligence. So we've always paid people well, and we want to continue paying them well, because that directly impacts the quality of the data we get. The more we pay people, the more interest there is in the competition. The more new people come in. So that's very important, and the price has dropped recently. So we want to support the price, essentially. And most of our trading strategies are not that capital intensive. So market making strategies, typically, like, we work on very fast resolution markets. So the markets settle like in under 24 hours. So you can recycle that capital. So you don't really need a massive bankroll. Like, if someone said, hey, here's $50 million, go trade, it wouldn't necessarily be very useful to us, because we're running market making strategies that are very high frequency and don't use large amounts of capital.
Thanks very much.
Question for Bitcast. Was it BitGet did the campaign?
Yeah, BitGet. Yeah.
What were the KPIs they were looking for? Was it customer acquisition, brand exposure?
So it was more general exposure and awareness. It's kind of top of funnel stuff rather than trackable conversions down at the bottom. Yeah.
So the KPIs like branding, engagement, reach.
Yeah. So we're working with their influencer partnerships team, which is just one part of their marketing efforts. And a lot of that work is more like awareness, visibility, particularly on new features, new components that they're adding to their platform. But it's all sort of top of funnel for them. But we also do more targeted things, especially on X. So we also do a lot of sort of tracking and mapping of ecosystems and understanding specific ecosystems and trends. And once you can do that, you can then target with quite relevant campaigns as well.
And what kind of level of investment for that single campaign would they have to make?
A real range, anywhere from 6,000 to our top package is 35 at the moment, but really there's no end to how high we could go with that.
Thank you.
Cheers.
Cool. First of all, thank you so much, guys, all three of you, for the phenomenal presentation that you all gave. My question is for Synth. Since you just mentioned that you're going to close the APIs and the services for the general public, I just wanted to know, like, what is the value that you're providing to the people that could come into Synth and, like seeking something that they would get useful for it more than just for the synth itself that you're trying to trade itself. Why is the like the trading thing has to be inside the Bittensor? Why not like any other outside decentralized, not decentralized, like normal market makers? How would that go, or what are the other things that's coming in?
Yeah, thank you. So we learned a lot opening up the API. So when we opened up the API, we just published like a strategy we ran publicly that did quite well on Polymarket. So a lot of people had an expectation that they would like plug in the data and instantly make money. And that expectation is firstly not real, because trading is difficult and it takes lots of time and iteration. Also, markets change very rapidly. So we saw Polymarket add fees, like pretty high fees on a lot of their markets, which made the types of strategies we previously ran difficult to run. So, you have to adapt. And we learned that like a lot of people who were using the API had the right idea, but like the wrong kind of like execution. You need to now to compete. It's like table stakes to have very low latency trading systems. If you don't have them, you can't run market making strategies very effectively, especially on the short time horizon markets like the hourly or 15-minute markets. So we spent a lot of time building those internally, so we would like have a better advantage there. And this is like typical of what a trading firm would do. And additionally, it takes a lot of work, and like especially around customer support. And actually, like the amount we're spending on compute was getting pretty significant. It was getting up to like 30,000-40,000 a month to serve the API. And like the WebSocket, like people have these systems like continuously running. So it was profitable, but not as profitable as us running it or running our own strategies on the data internally. So yeah, that's why we're sunsetting it. But it's been a good learning process. And yeah, we're looking to work with like larger partners. We have a couple large partners who use the data. We'll probably continue with them on different terms at a significantly higher price. But yeah, we will make sure they sign NDAs. We have agreements on the types of places they can trade, etc. So they're not competition for us. That's the focus.
That answers my question. Thank you.
Thanks. This is a general question. Can you explain what kind of corporate entity a subnet is? Are there equity holders separate from the tokens? Or, how is it structured?
Yeah, so in our case, we have multiple different entities, and the only equity holders are the team. And like our goal is for value to drive value to the token. I think that most tokens like on Bittensor are the tokens on Bittensor are fairly unique in that they're like a staked asset. They're not actually like a token that you hold, because when you go into a subnet, you stake your tau to get alpha and you unstake to get tau. So it's fairly complex, we found, to have like a foundation structure around that, because it's a staking asset versus like a token in itself. We kind of use the business to drive value to the token, or that's our goal. The entity is just owned by the team.
Is that the case with most subnets, that there's a separate team or investors who own equity that's separate from the token?
Yeah, I would say so. I think across the board, I would say for the most part, someone can correct me, but you've got an entity, and then you've got the token, and there's different relationships between those two throughout the ecosystem. It's pretty varied, I would say, on that front.
And what determines the share of value that goes to the token versus the equity?
I think what you have to understand is that effectively in Bittensor you've got 128 different companies doing 128 different things. And if you were to ask this same question to 128 normal companies, you'd also get 128 different answers. And I think what is transparent and fair across the board is that you've got teams that often have developers from different countries. You've got people based in different parts of the world. And I think the honest answer, frankly, is that the Bittensor and the crypto ecosystems are often emerging faster than the legal frameworks of companies that exist today. So it's actually quite frustrating trying to do things in an optimum way, because some countries are ahead, some countries are behind. What's true here is different over there, and ultimately I think everyone is probably just trying to do the best to make it make sense. So obviously in my case, having my business that's registered in the UK for 10 years as its own entity is one thing, but of course then people are legitimately going to ask, well, how does the relationship work? What's it going on? How does it work? Where does the value derive from? And I think ultimately we're all kind of figuring it out, is the reality of the truth. And that's not because anyone is trying to do anything they shouldn't be, so much as just that this technology is moving faster than the typical frameworks of business. And that's a blessing and a curse. But ultimately, that's where these advantages come commercially, that you can get ahead of that. And I think that's why we're probably all in the room, because we're keen to be in front of that in some respect.
So is it the case that your incentive to put value into the token is because you need to incentivize the miners who are providing value to your businesses? So if you were to disenfranchise the token, you would basically lose your miners, and therefore you wouldn't have a business.
Yeah. So again, this is where it can get confusing for people. Is that in the classical crypto world, a cryptocurrency miner was someone that had a machine that was earning tokens. In the Bittensor world, that word's actually quite confusing. A miner is really a contributor. For Will, it's the people that are putting videos on YouTube. Completely different. Whereas in my subnet, obviously it's slightly more classic in that my miners have physical compute and are providing AI computation. So actually the nomenclature can be a bit confusing, but yes, your point is correct. And as much as that we want our miners to provide the best work, if my token price is higher, that means we have more dollars to pay for people for compute. If the amount of dollars that we can pay for people compute goes up, more people buy compute. If more people buy compute, then we have bigger data centers and the whole thing moves forward. And obviously each subnet will have a slightly different variation of that.
Thank you.
Any other questions for the subnets? Yes.
So mine's a general question. So from the point of view of a subnet owner, it'd be good to get to know what is the biggest advantage of being on Bittensor compared to like a Web 2 company, and what's maybe the biggest disadvantage, and what would be needed to be changed in the ecosystem to mitigate that disadvantage.
Okay, go for it.
So Bittensor is it's a whole different way of structuring and building and engineering and owning a company. That's what it is. It's a framework to do it all differently. It flips the script. And to answer, what's the biggest advantage and what's the biggest disadvantage, it's all kind of tied in one. So to build a company on Bittensor, you are, to some extent, it feels like you're engineering with one hand tied behind your back at times, because you have to be decentralized. You have to be permissionless. And these are all obstacles to overcome and can be very challenging versus just launching a business outside of Bittensor where you don't have these obstacles. So that's kind of the most difficult thing about it, is that. But then what that gives you, once you do build a company, it gives you the most powerful, scalable, highly optimized company, resilient company that you can think of. And that's essentially the bet that we're making here, is that these companies, whilst they're difficult to build, and many have come and failed, but now what we're starting to see is the good ones, the best ones, breaking through. And the bet is that by building in this framework, this new framework, we can actually be stronger than companies that are not built this way.
So for my company, I guess I kind of echo Will's sentiments in as much as, yes, whilst there are frustrations, particularly, so I am a normal business guy. I own a Bittensor AI technical decentralized ecosystem, and I, as a business owner, cannot write a line of code. Right, a lot of very, very smart people are in the Bittensor ecosystem, and my only frustration, perhaps, is there's too many nerds and not enough business people. But again, we need both. So ultimately, the frustration, I think, is I think the ecosystem is better than its ability to externally communicate currently. And I enjoy, any opportunity to try and sing the good praises of the ecosystem from people that are better behind a screen. And second to that, I think the acceleration for my business, and as much as that, yes, you could arguably say, well, my companies, we've sold equipment, we deploy stuff, enterprise companies pay us, why the hell do you need Bittensor? simply because it's a turbocharger. Because ultimately, that entire model for data center deployment works on commercial ROI. So if we can increase those commercial ROI numbers from the miner through the price of the token through the emissions, then ultimately that will accelerate the trajectory of everything that comes thereafter. So it's quite an obvious and linear path. And I think if you drill down into individual subnets, the pathway is clear.
James and Will. He says nerds lovingly, by the way.
Yeah.
So did you have something else?
So Bittensor is incentive mechanism. Incentive mechanisms are very powerful. And in our case, we could, if we want to source the best volatility data for financial assets, there's two ways we can go about it. We can hire loads of smart people and put them in a room, or we can hold the Olympics of volatility modeling and invite everyone from around the world to just submit. And that approach we believe is the best. There's been a lot of successful hedge funds in the past that have been built around crowdsourcing data. So WorldQuant is one. I think it's I don't know how many $1 billion that is, $80 billion, maybe more. Numerai is another. And there's many examples of where crowdsourcing is very effective. And Bittensor has given us that essentially that framework to crowdsource and reward people for their work. The biggest frustrations, I think the ecosystem is quite hard to keep up with. A lot changes. And so you constantly need to be on top of the ecosystem as well. You can't kind of just sit back. You need to be active. But the community is good. People are super smart. And it's moving in a really great direction. So yeah, generally great.
Nice. I just wrote some notes as the questions were being asked. I had a kind of my own 2 cents. The intermittent power suck question is a very good one. So for those that are not familiar, so when you have these massive data centers like OpenAI or the Colossus 1 and 2, what happens is they're doing pre-training. So you have all these clusters together, coherent clusters, and they're trying to pre-train a model. And what happens is that they'll go from 100% on power, churning, and then they'll go 100% off, so 0% in milliseconds. So on, off, and a few milliseconds later, on, off. So it's that on, off constantly in the space of milliseconds, which is where that question stems from. But the thing is, with pre-training and inference, the loads are different. So with pre-training, it's that on-off. But with your 4090s and 5090s, you're doing video work for gaming companies and whatnot. So it's here's a task, churn through this, and it's more of a linear, constant thing. There's no on and offs with your inference. Is that correct?
Yeah. So a good numeric example would be we've been running data. Obviously, we check everything. So if we take 250 kilowatts worth of deployment, our peak load in the last 6 months was 137 kilowatt, and our minimum load was 91 kilowatts. So actually remarkably static, just because of the nature of the type of AI work that we specialize for.
And your question actually alludes to another sort of challenge. So a couple of years ago, most AI researchers and engineers said that distributed pre-training would never happen. Because if you have a whole bunch of different compute all over the world with different spec GPUs, different power loads, how the hell do you pre-train a big model where the power consumption, the energy providing, and the actual clusters are all different? And this is where some of the subnets in Bittensor, I think, are going to shine. So subnet 9 IOTA, and again, owned by Macrocosmos, a London-based research lab, they're nailing it. So it's one of the holy grails of AI, how to pre-train a model using nodes all over the world and be the architect and basically be the conductor of a big orchestra to stitch it all back together. And so there's going to be some pretty cool news coming out of subnet 9 in the near future about that, which again will put Bittensor back on the global stage. So that's that. Again, for those not familiar with this with subnets, there's this weird ballet dance between subnet owners doing their buybacks of their own token versus the miners. So the miners are the people providing the output to the subnet. So they're the geniuses around the world or whatnot. And Bittensor pays them in the subnet token that they're mining on. Now, if there's a spectrum. So if you have a compute subnet, they have electricity costs and hard costs. So they get the subnet token and then they dump sell straight away to match costs. You then have, on the other side of it, you have Bitcast. The miners are YouTubers and X posters and stuff like that. So there's no like hard costs. So they're more inclined to just sit on the subnet token. So and then it's that spectrum. So the holy grail for subnet owners is to get to the point where they're using the output from the miners to create an amazing service or product to go and get revenue in the real world, and that the revenue and the profit they make in the real world is more, so they can do buybacks. So the buyback is more than the miner sell side. When that happens, theoretically, the subnet token price should just go in one direction, and that's where every subnet is trying to get. So, and the other job of the subnet owners is to try and incentivize miners to be more like to join in on their vision. So you want to decentralize or democratize video agency or just eyeball reach, basically. So you're trying to get your miners to believe in your project as well as get paid for it. That's that. One thing I noticed about Bitcast, it's not just YouTube's. Your X campaigns, I think, are pretty effective from some of the things. Like, what niche? So you're focusing on Bittensor at the moment. What other niches are you going to expand into?
So I think people don't realize this. We started on YouTube. We've moved to X. This month, or month just gone, is actually the month where our X revenues exceeded our YouTube revenues. So we're actually doing more business there now. And I think it's just a very provable landscape. So we started by doing marketing on X for different subnets, and to be quite frank, we'd run a campaign and this subnet's alpha token would go high, and we go like, well, there you go, there's the proof it works. Really effective. And then now we've started moving into prediction markets, also hyperliquid ecosystem. So this is what I was talking about before, is like mapping ecosystems and then selling promotion into those ecosystems to brands. So we're working with lots of new clients in prediction market spaces. We're working with lots of prediction markets themselves and prediction market products.
So Bitcast is easy to understand. Cowshit and compute 110 is easy to understand. One of the hardest ones to understand is actually Synth, subnet 50. I always get people going, so you're not like a price prediction thing, you're a price path probability forecaster. So can you please, in 5-year-old English, how would you compress or explain Synth in 10 seconds to a 10-year-old?
10-year-old?
11.
Smart 10-year-old.
A smart 10-year-old.
Okay, so it's volatility forecasting. So, like, how much? What's the range that the price can move instead of what's the specific price going to be in 12 hours? What's the likelihood that it will be a certain price in 12 hours?
So I guess for traders here, when you're placing a trade, you'll probably have a take profit limit and a stop loss. So if you could be directionally correct, but if your stop loss is too close to the noise, you could just get stopped out, and then it will go in your favor. So I guess for traders or hedge funds that you're going to sell to, they'll want to know your volatility or price path probability so they know where to put their stops outside of the noise. Would that be
Yeah, exactly.
correct?
I think the other way is to think about it is like a lot of traders think in probabilities. They don't think tomorrow the price of SpaceX is going to be $177. They think, okay, I think there's like a 30-40% probability it's going to reach this level. And, they work backwards on how much they want to put onto that trade, what their risk level is. And so, you see that across a lot of different areas, finance, like games like poker. People are thinking in probabilities. So that's what, the task we get miners to do.
Okay. So there's a contentious question around Bittensor at the moment because there was a notable subnet owner that just suddenly decided to sell up and leave. So the question of exits, it hasn't really been discussed or even solved properly, because going back to, I think, one of the questions about entities that, Is there a topco that owns the subnet? Like, it's all different. You know, there's a whole bunch of subnets where there is no topco. It's just like the subnet owner owns the wallet personally, and they haven't even thought about it. So, for you three, like, I'm of the opinion that everyone has a price of some sort. So if I just waved a check, Will, and we're like, here's 100 billion, can you just leave Bittensor? You're going to say yes, aren't you?
Shaking it.
Nah. And so when you take things to the limit, like, okay, let's get rid of 1 0. And then it comes down. So for this particular subnet owner, he saw 10 million was his exit. He was like, right, I'm off. So for us as DSV and some other, in General Tensor and some other sort of facilitators, I guess is what we are, we want to try and foster a really good answer to this question. So, you know, ideally, I would like a subnet. If I'm investing in a subnet, I'd like them to have put some brain glucose towards that question and going, right, yeah, here is a target that we are actively looking to sell for, and we will put, 25% of the proceeds into alpha buybacks of some sort. But it's not as easy as that, because the moment you start saying stuff like that, you're projecting forward-looking. It's a forward-looking statement. So these subnets could then enter in a whole spot of bother by turning themselves verbally into a security. And depending on what country they're in, they could be in deep doo-doo for that. So have you guys thought about exits at all? Like, are you ride and die in Bittensor, or are you looking for a big fish to come and gobble you up?
Ride and die, for sure, I think, for the time being.
For the time being. There's that question.
Well, we're not focused on an exit. We're building something with real value. The subnet itself and the miners are integral to the value of our subnet. In terms of, like, you know, what are our intentions? What are our goals? We want to sell at this price or this price. It's pointless. There's nothing I could tell you here that you'll believe 100%, okay? This isn't about trusting someone's word. I think you've got to look on chain. We're fully transparent, and we invest our revenues back into the chain. And at the end of the day, that's something you can see and prove. So I think that spells out our intentions for the subnet. And I think that's what you should be looking for in every subnet, is these on-chain commitments to the future of their business and subnet.
Any other things to add, or?
Yeah, I mean, again, with my business, you know, obviously I've had a few equity offers over the years because we're an AI infrastructure deployment company, and obviously they're worth some stupid EBITDA multipliers right now. It's the hottest ticket in town. But any educated person that I would ever consider a conversation of a big fat check with would only be the type of person that would understand Bittensor, understand its advantages, and want to wrap that up into whatever happened thereafter, because why would you not want to turbocharge the very thing that you're looking to purchase? So for me, actually, it's not so much a question as of how the two things separate, but ultimately how do the two things combine for a net positive value? And ultimately that gives me, you know, certainly for all the mechanics and the mechanisms, you know, again, as we've alluded to, may change as the ecosystems evolve over time. Pragmatically speaking, I don't necessarily see any reason why they wouldn't be in the same basket, in as much as that the one provides fuel to the other. And that's why I feel quite confident about those two things going in
the miners are the moat. So there's a research company called Noose Research. They used to be a subnet on Bittensor, and they left Bittensor because they managed to raise $50 million out in the real world. So they replaced their miners by having a massive OPEX, and they're having to pay huge salaries in order to replace those miners. Anyway, thank you so much. Big round of applause for Big 3 Subnet. Thank you.